Australian house prices are back at record highs. Something that nobody predicted in the Australian housing market is that in 2021, house prices would not crash, but they will go to the moon. In this video, I'm going to go over the latest housing market data to see which markets are the winners and which markets are the losers. If you're wondering how this is possible, how the Australian housing market is going up when we just had our first recession in 30 years, I'll go over exactly how. So sit back, relax, and let's get into it. And if this video brings you value, please smash the like button for the whole YouTube algorithm. It really helps out the channel a lot. And if you're interested in more Australian housing market data, investing and personal finance, subscribe for more awesome content. Okay, let's dive in. The house prices rose 0.9% in the month of January, taking the Australian housing market beyond the peak of 2017. CoreLogic data shows us that house prices are 1% higher since the pandemic began and are 0.7% higher since the peak in 2017. The gains were broad, every capital city recording a rise, but the biggest gains were in the regional housing markets. Regional areas grew at a much faster rate of 1.6% and are 7.9% higher over the year. So this just goes to prove that not always capital cities outperform the regional markets, and we are seeing a big migration into the regions since the pandemic began. And this is something I even saw before the pandemic began, as there was better affordability, better lifestyle factors in the major regional markets compared to the suburbs. And as train lines get faster, as more people can work from home, and who knows, in the future we may have driverless cars where commuting won't be so much of an issue. But Sydney and Melbourne have still not reached their peaks, and they're still down about 4%. And we are seeing more interstate migration into the more affordable states. But units still are underperforming, and they're down around 0.6% in Melbourne and Sydney, and houses are really outperforming units right now. And I don't know much people that want to stay in a unit if they've been in lockdown for the past 6 or 9 months in a 1 or 2 bedroom apartment. They're going to want some more space, and it's just simply supply and demand. They can make units a lot quicker than they can make houses. And as long as the international border stays shut, this is going to have a continue weakening demand on the unit market, and it's something you'd have to watch. If you are looking at getting into a unit, if you don't mind staying in a unit, then there may be some more affordable units coming onto the market this year. Okay, so let's now break it down state by state to see what are the best performing markets and what are the worst performing markets. Sydney and Melbourne were up 0.4% for the month of January. Brisbane and Adelaide up 0.9%. Perth up 1.6%. So we are seeing some strong growth in Perth, and that may be to the more affordability, and it has been in such a big downtrend over the past few years, or is down or was down around 20% from the peak. Hobart is up 1.6% and seems to be consistently gaining in growth. Darwin is up a massive 2.3%, and I think that is due to the affordability. There weren't many cases during the pandemic in Darwin, and it was the most affordable capital city out of all the major capital cities in Australia. So we maybe see some people downsizing if they've got a property worth $1 million and then they can go buy a property for $500,000. Then all of a sudden they've got an extra $500,000 to play with and maybe have a better lifestyle up north. Okay, now let's look at the regional housing markets, which is the best performing markets right now. So regional New South Wales is up 1.5%, regional Victoria up 1.6%, regional Queensland also up 1.6%, regional South Australia up a whopping 2.3%, regional WA is up 2%, so also some strong gains there, regional Tasmania up 1.5%, and the regional markets in the Northern Territory not doing too well, just up 0.1%. So I know what you're probably thinking, how the heck are house prices going up so much with all the uncertainty that we had last year? And it's not just the housing market. The stock market in the US is at all-time highs. Australia is approaching its all-time highs in the stock market. Gold is up. Cryptocurrencies are going crazy. You may have seen these things going on in Wall Street bets with GameStop, which surged thousands of percentage. And now it's obviously crashed. And it's due to the massive amounts of liquidity by the central banks. The central banks have flooded the markets with liquidity, with all their quantitative easing, with all their money printing. There's been huge amounts of stimulus by the governments and handouts. And people are a lot smarter now than they were maybe 10 years ago with the financial markets, with the stock market. People are a lot more aware that when government creates huge amounts of stimulus or gives handouts or free money or helicopter money, when interest rates go to zero, when central banks do massive amount of quantitative easing, they know that this fuels asset prices. And so not many people now want to hold cash. They all want to hold assets because their money, their currency is being devalued heavily. You know, I'm sure you've seen lots of charts where 20 to 25% of all US currency in existence was created last year. So even if there's, you know, inflation is not 25%, there is still more money there, and that is devaluing your money. It's not so much that the prices are going up, it's also the fact that currencies or the dollar is falling. And so all that money has to find a home, and I guess, you know, pun intended, they're finding housing and property to park their money. And we've seen dwelling approvals are up, lending growth is skyrocketing. We are seeing investor growth now starting to pick up. So investors are starting to see the gains in the housing market. There's more certainty now in the housing market. So investors are now starting to jump in. But we'll have to see how that goes because rents are still falling in many areas. If house prices keep going up and rents don't go up, the yields aren't going to be that great. And, you know, I don't want to be holding a negatively geared property. I'd much rather hold a positively geared property. And like I was saying, another key fact is interest rates are so low right now. You can get investor loans and owner-occupier loans below 2%. And with inflation, you know, even though they're not reporting it, you know, accurately, or you may not agree with what they're reporting it, you know, around 2% inflation, that's when you factor in inflation and interest rate, it's almost like they're giving away money, and investors and owner occupiers are taking that money and putting it in property. And if you can get, you know, a 0% interest rate or effective 0% interest rate, and then your property goes up 10%, you know, that's a massive gain. If you're just putting down a 20% deposit, you're actually getting a 50% return. With all these low interest rates, with all this quantitative easing, people's risk appetite is rising. They know what the central banks are doing now with the great thing of social media, and with YouTube, people are a lot more informed. And they're saying, okay, I don't want to hold cash. I want to put in precious metals, cryptocurrencies, shares, real estate, land. And that's why we're seeing, it's not just a housing bubble, it's an everything bubble. And it's due to mass money printing. So what do you guys think about this crazy, crazy markets we're in right now, with the housing market booming, with the share market booming, with all these crazy Wall Street bets, things that are going on. Dogecoin, I don't know if any of you are into cryptocurrency and seen Doge that's gone up, you know, 10x in the past month. There's really some crazy things going on in the financial markets as a whole, you know, with the silver market, with the short squeezes. I've just been watching, it's been pretty entertaining to watch. I know I haven't made a video for a while, I've had a lot going on, apologies about that. I will try to be making out more content. But yeah, going on to what I think will continue to happen this year for the property market. Unfortunately, I think house prices are still going to keep rising. Housing unaffordability is going to keep rising. I think the government has to really do something here, because also another alarming thing is happening is the lower end of the market is rising. So then that just makes it even harder, because a lot of these first home buyer schemes, it lifts the lower end of the market. That doesn't really help out first home buyers, and it just makes it harder and harder to get in. So if these gains do continue for the rest of the year, we could see house prices up 5 to 10, and in some areas even 15% in the regional markets if these gains continue. But a big test is coming. The job seeker, job keeper schemes are being withdrawn. A lot of government stimulus is being withdrawn. So that will be the real test for the economy. A lot of jobs are coming back, but we're not quite there yet. So that's something I'm watching to see what's going to happen after March, once all this stimulus gets taken away, and also once the mortgage holidays end. Unfortunately, I think it's going to affect the lower end of the spectrum, and properties where, you know, it's $1 million plus, those people aren't going to be as badly as affected. So I think those markets won't be as affected. But we have seen the reason why the property market wasn't so affected last year was because most of those people that did lose their jobs weren't property owners, or weren't going to be buying properties worth $500, $750, $1 million. It has been a crazy time the past few months in the financial markets. I'm sorry I haven't been uploading as many videos as I should. I've had a lot going on personally, but I will be pumping out more content. I appreciate all those that are still watching these videos, that are coming back and that taking the time out of the day to watch me. I miss all you guys. I love all you guys. I love this community that I've built. and we'll continue to monitor the property market, and I'll continue to bring out more investing content, personal finance content to show you guys how you can get ahead in 2021. And of course, I'll see you in the next video.